Well, good afternoon, everybody. This is Phil Gibson with the Unity Group at Keller Williams. We welcome everybody today for our broadcast on Unity Threads on YouTube. And today I've got Danielle Lammon with the Danielle Shannon Insurance Organization. She's been a industry specialist for, what's it been now, Danielle? 6-7 years?
We're in our 7th year now in Southeast Aurora.
So 7 years. And the reason I asked Danielle to join and give us some insight on the Unity thread today is with the fires that occurred up in Boulder County. There's been a lot of questions about the insurance coverage that people have. Are they underinsured, insured just right, maybe overinsured? I haven't heard that whole lot, but you hear a lot of underinsured. And so I asked Danielle to kind of share, how to review a policy, how to work with your agent to review your policy, and then just the questions maybe to ask your agent to make sure that you're insured adequately. And then I think also, Danielle, maybe just talk a little bit about, this idea that, the complete value of my property should be covered and how that's probably not really realistic on the basis of what the cost to benefit ratio might be. So I'll leave it over to you and give us a little bit of insight on yourself and your experience and all that. That'd be great.
Great. Thanks, Phil. So yes, Danielle Lammon. I've been an agency owner in Southeast Aurora and Durango for the last 7 years. And we specialize in home and auto as well as life and business insurance. And when we're looking at home insurance, one of the things that we always do in our office is we pull the county assessor site. So when we're pulling in the data and we're looking at your estimated reconstruction cost, which is going to be different than your market value. So your estimated replacement cost or reconstruction cost is what we pull is it's kind of looking at your home square footage, how many stories is it? Is your basement finished, unfinished? How, is your garage built in? Is it attached? So we're looking at all of those different pieces, as well as do you have a builder's grade kitchen, which is interesting when you talk builder's grade because we have all of these great new homes being built, and builder's grade anymore is granite, is updated cabinets. So those are just questions when you have an agent that you're going to chat with and say, we have granite in the bathroom, or no, we just have, a basic powder room, so that we're making sure we put that correctly documented and then getting that estimated construction cost. And so from there, once we get that number, we can't go below that. So that's kind of setting an industry standard, if you will, for this is the math, the actuarial tables behind it. Now we can't go below that, but where do we want to go to make sure you have enough coverage for your home? And a lot of times, again, like Phil said, it's not going to match the market value because your market value of your home is what you're going to sell it for, what you're going to buy it for based on the school zone you're in, the school district, the zip code, if you're walking distance to great restaurants. So all of that's going to play into that, whereas your reconstruction costs and your dwelling coverage, again, is coming down to if you lost your home, what is it going to take to rebuild that structure because the land is already there. If that helped. Do you have any other questions on that one yet?
Hey, Danielle, hold on a minute here. You're kind of breaking up on me a little bit. How's your internet side? Mine's looking pretty strong, but I don't know. Is yours?
Mine's really strong.
Okay.
Yeah.
Let's go ahead and continue and let's see how this runs out. But notice it's breaking up a little bit on us there.
Okay. And you can hear me okay? Other than it seems to be breaking up.
Yeah, I can hear you fine. Yep.
Did it break up when my phone rang because it was background noise?
It might have. I didn't happen to notice whether the phone was ringing. I was just kind of listening to what you were saying. So yeah, we're
okay.
Good. We can
All right.
keep rolling. All right. So you mentioned the dwelling piece. So if we're reviewing, like if I'm, I pull out my policy or I get online and I look that up, what kind of things should I be looking at in that policy document to, kind of make sure I'm within range? Or what questions should I be asking my agent to make sure that I am, because I know, I've heard some things where some agents have people just at the state minimums on certain things, or, there are these wide variations to save people money, but they could potentially be underinsured. So let's say I know my house, let's just use a round number. I know my house is worth $550,000 in the neighborhood I'm in. How should I compare that to what you just described? I got my market value of my house, but now I need to understand, how do I insure it to make sure that I'm insured effectively?
So I know that there's been some numbers tossed around for rebuild cost and kind of what it is per square footage.
Hmm.
So I think a good number right now is around $300 a square foot. So looking at, and I know that's kind of simplified a little bit, if you will, but making sure that you're not grossly underinsured. So if you have 1,000 square foot house, we would hope that you're, closer to 300,000 in coverage, not 100,000, I guess, just to put it in simple terms.
Okay.
But I think when you're reviewing your policy documents, one, I totally recommend a local agent, whether that's me and I can help you out or another local agent you can go and talk to, but really breaking down the policy to say, is my square footage up to date? Is my basement finished, unfinished, up to date? Because all of that goes into that number for reconstruction if you have a loss.
Okay. And how is that broken out? I know I've heard, you have this, I heard there's indwelling and then there's extended dwelling. And then I've even heard of some of these things that are like endorsements that you can add to your policy. Obviously, there's some additional cost, but can you kind of go into the extended dwelling and then some of these other endorsements that are out there that can protect, maybe other stuff that isn't covered by the traditional extended dwelling piece?
Yes, so there's a couple of coverages that are optional. You do pay a little bit extra for, but one of which is extended limits. So every company kind of has their own limit for extended limits. The policies I write, our extended limits are 20%. So it would be your dwelling coverage plus 20% in that event of a total loss. And so that is when inflation might catch us off guard. That's when there's a big loss like the fires. This is kind of coming into play to cover that extra cost, if you will. So extended limits. The other one we have is building code coverages. Again, that's optional. We write up to 10%. So that also comes in because when you have a loss, if your house is not up to code, there's an extra cost to bring it to code. So extended or the building code coverages can help give you extra coverage there. And then the big one that a lot of people are using with not being able to have their home if in the fires loss is additional living expense. So that is providing coverage for temporary housing, temporary expenses. And again, every company has their own limits and timeline. For our policies, it's up to 24 months. So there isn't a dollar amount to that. It's basically kind of an open piece because it's looking at if you're a family that lives in a 6-bedroom home because you have 4 or 5 kids, we're going to get you into a home that's equivalent versus if you're a husband and wife and no kids, you can, go into 1 or maybe a 2-bedroom if that's what you need. So that's why that extended coverage. And a lot of that comes down to as well, the house has to be deemed uninhabitable. So it's kind of a keyword for a claim that that coverage comes into play. There's also coverage comes into play when you are mandatory evacuated. You can also use that. So if you're in that fire zone and people were told they have to evacuate, that coverage can come into play for a hotel temporarily, an apartment, or a house, again, depending on the extent. And other coverages that we just talked about, that's your biggest piece for the coverages themselves for your structure. There's also other structures. So other structures are things that are not attached to your house. So that's another thing when you're looking at your policy. If you have a detached garage, that falls under other structures. You need to make sure you have enough coverage there so that if you had a loss, that you're not shortchanging yourself for what it would cost to, say, rebuild that garage. And and then again, anything external. So good question, or you should let your agent know we have a gazebo, we have a hot tub, we have this, so that they're making sure that there's enough coverage there as well.
So that includes any really detached items. So gazebos, hot tubs, sheds, any of that kind of stuff.
Yeah. Yep. A workshop, again, a detached garage. Even some people are now attached, like doing like Airbnb secondary dwellings. So again, that would all fall under that coverage.
Okay. Now, one of the things you hear about too is people have lost, everything in their house in the sense of a fire. What is the best way, like today, to kind of keep track of the items that you have, personal items in your house? I mean, should you keep like a spreadsheet inventory? Should you walk around with a video camera and kind of videotape it and then upload it to the cloud? What's your read or thoughts on that?
I would say it's whatever feels right to you. I know that's kind of a broad answer on that, but I just talked to somebody and he has a huge collection of sports memorabilia. Well, it's not necessarily something that you would schedule, but if you had that loss, so in that case, my recommendation is yes, take pictures, make a spreadsheet, take pictures if you even have the certified copy of something like, I know my husband has a bat that's signed by a Rockies player, things like that. So taking those kinds of photos, keeping a spreadsheet. I offer to my customers, they can send that spreadsheet to me and we'll keep it in our system and their customer file as well. Because if you lost your computer and that's where it's at, you're going to want to have a backup. So I offer that for all of my customers. They can send me that list. I'll keep it in their customer file if something happens. But it's always a good idea, take pictures, do an inventory. For you guys doing real estate, that's always the time when I know a customer's moving. That's exactly when I say, take an inventory of your home, because you never really know what you have until you're moving it. Yeah. And it's the perfect time because you're literally touching everything you own to go room by room and say, in the bedroom, we have this TV, we have this, this furniture, or, in our office, you might have a couple of laptops, throw in those serial numbers, and now everything's digital. Take a picture. If you buy a new laptop, or even phones are so expensive these days, just take a picture of the receipt. If I get a new one, I just take a picture of the little description, the serial number on the side of the box with my receipt, and then it's saved in, my own cloud. If I had an issue, it's there. But some people videotape. If you've got something like extremely luxury clothing, yes, take pictures, take video, because that's going to be different when it comes down to a loss. Although in a total loss, it's just a total loss. I've heard some insurance companies are making people prove what they had. I know for our company, we're not doing that. If you had a total loss, you had a total loss. Here's what your coverage is. Okay. But documenting what you have is a good idea in like for a theft, or when you move, those kinds of pieces where you would have a police report and have to show what you have.
Sure. So, that's a great point, what you brought up there. So what's the difference between, say, a substantive loss of a few items due to a theft and a total loss, like in the sense of a fire? What is that, the definition from an insurance perspective on that?
Well, I guess it just really looks at, again, that total loss of, do you have it again? And things are replaced. So like our products are personal property coverage is replacement coverage. Some of it's an actual cash value. So there's a little bit of difference in that. When you're doing a loss due to a theft, you would file a police report, you would document everything, go back to your insurance company, file a claim minus your deductible to replace those items. In a total loss, there is still a deductible, but again, from our claims people that we're hearing from our company, it's there. If you whatever your coverage amount was, they're just giving you that amount that's on your personal property, because you have nothing. You have to go back and replace it all. I know in the cases of a fire, some people are getting like it's immediately dropping onto their debit card, not maybe the full amount, but 10,000, 20,000. It just depends on how much coverage you have to at least go and let you get some changes of clothes and shoes and personal items right away while everything gets settled.
Yeah, no, that makes sense. You brought up something I think that's a common question for a lot of people is, what's the difference between actual cash value and replacement value? And how is that relative to like what you described as the dwelling coverage? How do most insurance companies relate that to the current environment, the current dwelling coverages that you see out there?
So ours is it's interesting because it's kind of like it's replacement cost up to your limit.
Okay.
So that's a little bit where that comes into play. So I understand there's been quite a few people that are underinsured and they're like, I have replacement costs. Yes, you do, but here's also your limit. Yeah. So there's a little bit of layering in that. So that's one of those things that you just have to know what that is. And is it enough? And then you also have to remember, so reconstruction, your dwelling is that one pot of money, but then your personal property is everything. And I always just tell the people this: if you took your house, flipped it upside down and shook it, everything that falls out, that's your personal property. So
Right.
appliances falling out are personal property. So then you're kind of looking like, okay, here's my dwelling. So this is what it's going to cost to put my structure. Now here's my personal property to buy furniture and linens and clothing. So that's where those kind of different pots of money come into play and then layer up, if you will, in a claim situation.
Okay. Okay. No, that's good to
But
know.
let me go back to your cash value really fast.
Yeah.
So a lot of times, even if you lost your personal property, say in a theft. So we'll just talk a theft situation. What happens is you will actually get like an actual cash value minus the depreciation. And that will be basically your first payout, if you will. And then if you go and you replace that item, and then you can send your receipt back in to say, no, I really did replace it, and this is how much it cost. Again, depending on your insurance company, ours will give you back that replacement cost because you truly replaced it. So, so an example, if that's okay to give, like my daughter was traveling, she had her cell phone stolen, a brand new iPhone. And so she had her own renter's policy. She filed her claim. We got the phone. We had to ship it to her and everything. And so they initially gave her one payout. We got the phone and then we submitted the receipts, even the FedEx cost, because we had to ship it to her because she was traveling. And then she was able to get that money reimbursed back for that.
Okay. Okay. Yeah, that's good to know. You bring up another great point there. These people that were in these, they were in a rental or they were in an apartment, some of these had condos and apartments that burned in this fire. How important is it for those people to have had some form of renter's insurance or, I don't know what other kind of policies they might have had, but what is is theirs just in a renter's policy, say for a house, condo or townhome? That just covers the personal items within the home, right? Or is there something else that also covers?
There's a couple coverages in that. So one of the things, and I highly recommend everybody have renters. It is extremely reasonable price wise. I mean, for our policies, they start at $11 a month. I mean, you can't go replace everything you owned for $11 a month.
Right.
And so when you get a renter's policy, you're covering liability. So if you do something to someone else's home, there's liability coverage in there that helps protect that. So if you set the kitchen on fire, that's your fault. That in renter's insurance would help cover that. And then you're covering your personal property. So I know I get all the time where people are like, I don't need renters. I don't have very much stuff. You may not, but again, like people in the fire, if you literally lost everything but the clothes on your back, it's going to cost money to go and buy new clothing and linens and a couch and a bed and everything and kitchen items. Even if you go to Goodwill, you're still spending quite a bit of money to replace that. And like I said, and it's so reasonable that, I think everybody should have renters. If you don't own a home and you're renting something, even if you're staying in someone else's house. So if you're renting a room from a buddy, or more of a formal situation, have renters because their policy won't protect your personal property.
Okay.
So you want your own, but it's the same thing. Like if you're a student or, even working and you go out to eat after dinner and your backpack or your briefcase is in the car and someone breaks in your car and steals that, there's no coverage on your auto policy for that. That goes under your personal property. And so again, if you had a $2,000 iPad stolen and your cell phone, you're out quite a bit of money versus if you just paid your renters, you'd have minus your deductible and you could get those items back.
Yeah. Well, and something you said right there too at the front of the description of this renter's policy is the liability side. I don't think a lot of times, a renter thinks about if I cause something, what's my liability in doing so? And so, yeah, that's an interesting component I hadn't really thought about. So that's good to know. Yeah.
Yeah. And anybody of my customers that they own a home that they rent to other people, I always recommend that they require their renters to carry insurance and that their renters list them as additional insureds. It doesn't cost the renter anything extra, but what it does as the homeowner or the person who owns the home that they're renting out to people, it gives you that layer of protection as well.
Sure.
And if your renters, when you're just listed as the additional insured, if your renters do damage or they cancel it because they show you the piece of paper and then they cancel it, you get notified just like a mortgage company would, just like a car loan would, if you're not taking care of and insuring that property. So It gives you that layer of protection. Minimal policies are 100,000 for liability. I know some people who require 300,000. And again, it's all reasonable, but it gives you that extra layer of protection.
Sure. That makes sense. How do people decide on what level of liability? Is that just a personal preference or based on recommendation from their agent? How does that normally work?
It just depends. So most policies, the basic amount of liability is 100,000.
Okay.
That's kind of what comes base. And then you can add our layers are 100,000, 300,000, 500,000. And then in some cases up to $1 million, depending on what kind of dwelling it is.
Okay.
That you can add for liability.
Okay. Good. Well, is there anything else that I missed in asking you or that you wanted to cover as it pertains to this area? I want to end this on a positive note too, which is, and you had mentioned this in a conversation that we had, fire this is kind of a unique scenario. I think you said most of the claims that you get tend to be, in Colorado where we are, it's hail, wind, and water types of stuff. So I guess that's one positive, I guess, from this is that we don't get a lot of these experiences. It doesn't sound like from what you were saying.
Mm-hmm. That's correct. We don't. What I usually see on the home side or renter side, if you will, I mean, we do have the occasional theft, but you're right. It's mostly a windstorm or hailstorm that's affecting roofs, personal, outside property, and then water from the dishwasher leaked, the hot water tank broke and leaked water everywhere. That's the majority of what we have. What I will say to add on to that is when you're looking at your coverages, which again, I'm always going to say it's so important to have a local agent you can call and talk to and go through your coverages, is also, it's not always about the cheapest premium, because the cheapest premium usually means you have the highest deductible. And if you're a person that can handle a $5,000, $10,000, $15,000 deductible, then, that's great. Look at where your budget is. But most people aren't in that. Most people, $1,000 of a deductible is hard to come by. And that's usually, at least that's the minimum we write when it comes to a home policy. You can go less with a renters in a condo or townhouse. But you have to look at that personally, because sometimes you just see that bottom line of your premium and you're like, I just want the cheapest. I think you mentioned that earlier when we were first talking. But the cheapest sometimes equates to, I have a claim and now I have a huge deductible that I didn't expect. I can't come up with it. Or maybe it's not worth you even opening the claim because your deductible is so high, you're basically self-insuring. And some people do that and they're happy with that because they can financially afford it. But really look at that and understand your deductible. I think that's huge, because I talk to so many people that aren't insured with us, but with other companies, they have a claim and they're caught off guard because they're paying $8,000, $16,000 that they had no idea until now they're in that situation.
Yeah. Well, and I think it's important for when you're talking to your local agent that, give scenarios that, hey, if this happened to me, what would my out of pocket be? Or if this happened, whether it's auto insurance or home insurance, I think sometimes it's better off so people have clarity. If you're the individual talking to your agent, share some examples, share some stories so you understand, hey, this is what my potential out of pocket be. Hopefully, it'll never happen. But if that day does come, you are set to you're okay paying out whatever that amount might be. And I think, the big one when I've talked to you about this is I think the liability piece, where you could, if you're not covered appropriately in that area, you could be pulling out of your own pocket significant dollars if you run into, because we're a litigious society and there are people out there that look for opportunities to pursue people in this area. So, yeah.
Yeah, 100%. And then, if you're a person with assets, I mean, there's that next level of making sure you have a personal umbrella policy that protects you again, in that making sure if you're sued, you have enough coverage on your policy so that you're not financially at hardship.
Yeah. And the other side of it too is even if you don't have a lot, you're driving a 15, 20-year-old car or whatever, and you're in your a rented condo or apartment or whatever, protect yourself. I think that's the recommendation. And I've heard you say that, just protect yourself, and whatever your budget is, just make sure you understand what you've got coverage. And I think the only way to really do that is to talk to your local agent.
Yeah, I would agree with you. That's a really good point, is just, yeah, you might have an older car, but doesn't mean you're not going to hit that brand new Tesla that someone just drove off the lot. And if you're underinsured, yeah, you would be potentially buying them a new Tesla. And in Colorado, they can garnish your wages. They can put liens against personal assets, your homes, your retirement accounts. So it's really good to talk to that agent and make sure that you have that coverage in place, that you don't get caught off guard.
Yeah. Yeah. Well, fantastic. Danielle, is there anything else you wanted to say or cover before we wrap up?
No, not really. I appreciate this time and stuff. And our office is always happy to give a free review. I'm a little different of an agent. I will tell you if I think you have great coverage, and I'll tell you if you're a little underinsured, because I want to make sure that you are protected and you're not getting into financial hardship, because I take that serious as my job, is to point that out and deal with that risk assessment with you.
Now, whereabouts is your office located? Remind us again.
So we are on the corner of Smoky Hill and Arapahoe.
Okay.
So we're next to Eastern Hills Church in Southeast Aurora, but we can provide insurance for anybody that's in the state of Colorado.
Okay. That's good to know. Yeah. So anybody in the state of Colorado can chat with you about what coverage they might need.
Absolutely. And then I know agents all across the country. So if you want to reach out to me, I'm happy to connect you with another agent who's very like-minded like myself, that's going to look out for your best interests and get you covered in your home state.
Cool. Great. Well, that does it for the Unity thread for this episode. And talking with Danielle at the Danielle Shannon Insurance Agency. We thank you for watching this. If you have any questions, I'm going to provide Danielle's information and contact information at the end of this session, so you can reach out to her. As she's mentioned several times throughout this video, she is offering a free review of your policy. And again, I would encourage you to reach out to that local agent the same way you would in the real estate side with us here at Unity Group. Always work with a local agent that can provide you the resources and information you need to get what coverage is, in this case, insurance, that you would want. So thanks again, Danielle. Appreciate it. And we will all talk again soon. Have a great one.